Hey everyone, thank you for joining me in this episode. I do apologize if you can hear some background noises. My housemates are having a chat now, so if it comes through a bit, just ignore it, but I'll try to speak a little bit clearly today. And the story for today is refinancing a property. What are the benefits? I think it's quite an interesting topic. And if you are a property owner, you've owned one for quite some time, you might look into refinancing. If you're looking to buy a property, I think it's something good to understand as well whether a property can appreciate in value or not. For example, if you buy a property that is freehold, then it is more likely that the property will appreciate in value. Whereas if you buy a leasehold, the property's value will go down over time as the years increases because it's a leasehold. So these are the things that you need to think about when you buy a property. Let's just go through the definition of refinancing. Refinancing a home loan means replacing the current one with a new one, and it now makes sense to do so if the new one offers greater benefits than the existing one, such as lower interest rates, a shorter mortgage term, or is more flexible. So let me put it in layman terms. If you've ever subscribed to Maxis Digicelcom, a postpaid plan, I remember years ago, like 5 years ago, a postpaid plan, like I was paying close to like 100 over ringgit for it. But then every time as the years go by, postpaid plans get cheaper and cheaper and cheaper. But these telco providers, right, will never tell you that there's a better plan out there now. It's on you to actually go there and tell them that you want a better plan because it's available now, black and white. That's what they're advertising. So if you don't take this proactive step, that means you are still paying the old rates, if that makes sense. So refinancing, you can do this after, like, down the line as your property appreciates in value. And you can do two things. One is you get a better term, which means you want to clear your loan faster, or two, you can actually refinance your property to get more cash upfront and be more liquid. So there's two sides to refinancing. Okay. um, let's go through some of the situations and the benefits. An alternative to selling your property to get the funds and to spare you from the hassle of moving out of your home. So this could be one of the two benefits I just described. Pros and cons: easier way to obtain funds because you might already have a relationship um, with the bank, and you already have a history of obtaining a loan. You can continue to own the property. So sometimes if you need the liquidity, people just think, yeah, just sell the house, but you can actually refinance your house. Mortgage loan has a lower interest rate compared with a personal loan. So if you need a lot of money and you're not in a rush to get it, you have time, you can buy some time, it's better to refinance your property if it appreciates in value rather than going for a personal loan or credit card loan, because a property loan is like roughly 4 point up to 4.5%. I'm giving you like very general numbers. A personal loan can go from like 7%, 8%, or even 9%, so it's like double. And then credit card is the worst. It could go up to like 16 to 18% per annum. So those are kind of your options if you want to get a loan. The downside of refinancing is it takes a longer repayment period than a personal loan. It's not suitable for emergency because the process can take like up to 3 months, and you may not get the desired loan amount because it depends on the valuation of your property. So
Thank you so much for watching,
situations
and
where
see you in the
you want to
next episode.
refinance the property to get money. um, some of the reasons could be, you want to expand your business, or you want to digitize your business, you need to invest, or you want to invest in maybe an auction property. You've targeted a few properties you want in that area for some time. You want to finally make that investment, or you want to further your education, or some medical emergency that costs keep rising you have to attend to. So those are likely the reasons. But also, let's go through this chart that I found. You can also refinance, as I mentioned, and the other reason is to lower the interest rate, which means your monthly installment is lower because now you're on a better plan. And by virtue of that, then you can also shorten your loan, which means you have more savings because you're paying less interest. um, this one applies to these guys here, so to get some cash for other needs depending on how much the value of the property has appreciated. And finally, to change from a flexi loan or to a fixed rate loan, this is not so common, but it's there anyway lah. But the top three are here. Why refinance? Again, I repeat, to lower the interest rate, and by virtue of that you save on total interest, or to get cash. Okay, let's go to the how to part. Some definitions again. Refinancing, a bank would only approve, again they have to do their due diligence on you. If you have a good repayment history, you have a good credit rating. Okay, and the second thing is you want to refinance to increase your liquidity. It's like a top-up loan, an additional loan on top of the current mortgage outstanding balance, where the loan amount is based on the appreciated market value of the borrower's collateral, meaning how much the value has gone up since you first took the loan for that house compared to when you first bought it. Okay, so how to refinance? Make sure you're no longer bound by the existing mortgage lock-in period, and look for the best refinancing package. So this one you have to discuss with your mortgage specialist. For example, they have a relationship with 10 banks, and your loan is like 10, 15 or 20 years old already. There could be better packages out now. They can offer you something, a better plan. You need 3 to 6 months of your salary slip. It just depends on which bank you're applying. You need your EPF, so you need to be a contributor, and you need other documents relating to the legality and ownership, S&P, things like that for your property. And also, this costs money, so the paperwork, I think there's stamp duty as well, and different fees. I think there's valuation fees involved and all that. So some considerations. Your property, if let's say it's a freehold, is in a good area, it could double in value every 10 years. Of course, this does not apply to for example, leasehold properties. And refinancing can cost anywhere from 10 to 20k, just a general amount, so it's not exactly free. That's why you have to be quite careful of the process as well. And top-up loan, anything less than 10,000, or actually it should be 100,000, typo here, is not really worth it. Why? Because if you want to top up the loan, but the cost of borrowing a loan is higher, so it doesn't really make sense, does it? So as a rule of thumb, it's not advisable to refinance if you can't get at least 100,000 cash after deducting all the costs, including the mortgage loan settlement as a new loan. Means a longer repayment period. So just a rule of thumb, like if you want to refinance, make sure you get enough dough for your efforts that you are putting in. Let me just end with a summary here. So example of a property refinancing for cash. Let's say you've been paying 2,000 ringgit a month to service an existing housing loan. This Mr. A, he still has 180,000 balance, but the property's value has shot up and is now 700,000. So after he refinance, right, the new mortgage amount is 560,000 after the new valuation, and then he has to settle that, which means the balance and the outstanding sum of 180,000, after deducting it, he gets 380,000 ringgit balance, and maybe after all the borrowing costs it could be 360,000. So that is how it works. I hope it gives you a little bit of a better understanding of how refinancing works. Thank you so much for watching this episode, and I'll catch you in the next one.